All right, welcome to the Nadex application and strategy webinar series. I'm Daryl Martin. I'm with ApexInvesting.com. And before we get started, throw up the standard disclosures. All trading involves risk, and full terms on our website there. And this is unique information presented by Apex Investing. And then, of course, the full risk disclosure going into future options, swaps, etc. all involve risk, not suitable for everybody. Trading is your decision, your responsibility. You're an adult. You decide what you want to do. I'm simply teaching you, and this is not an offer for you to buy or sell anything. And past performance obviously is not indicative of future results, etc., etc. And that's important to know, so that way you understand the importance of you going in and demoing and learning things before you just hop right in on anything that you see. Okay, so with the disclaimers out of the way, first thing I want to do is actually take you first over to Nadex.com. We had a decent amount of you that don't have an account yet, so make sure you hop on there literally right now and just go to trading. Like while you're on the webinar right now, go to Nadex.com, click on trading, click on demo trading account right here, and fill in the username, first name, last name, phone number, and email address. And you'll get immediate access. Check your email, and you'll have a password, okay, where you can log in. And I'll go ahead and paste that link as well into the general chat box for you, so you can sign up and get that going. You're going to want that because it's going to make it a lot easier to follow along if you actually can see the product versus just hearing the concept, okay? And it's free, costs nothing. And as soon as you sign up, they're going to give you $25,000 of funny money in there that you can play with. And so you can hit buttons and make mistakes. You can learn how the platform works. You can learn how to open a position to go long, how to set an advanced take profit order, how to open a position to go short, set a take profit order, how to edit a order, how to read working orders and open positions, and how to look at the account statements. And basically you just learn how it all works. And I have videos, of course, on our website that will help you as well in getting that going and understanding how it works a lot faster. If you hop on over to open an account, you can get a live account. It's only $100 to fund a live account. Takes maybe 5 minutes from hitting start and going to funded. Obviously, most traders are going to fund with more than that. But the minimum funding requirement is $100. If you fund with a minimum amount and you do a trade, doesn't matter if you're doing 100 contracts or a contract, doesn't matter if the risk is $3 or $3,000, okay? Whatever it is, if you do a trade or more with a live account, once you place that live trade, you can call Nadex, and they will extend your demo out for 1 year versus just a couple weeks. So pretty easy to get that up and running. And you can call them again to re-extend it at the end of the year, etc. But anyway, so you can call them. The numbers right there. It's also just on the homepage of Nadex here at the bottom. Call us toll free right there. It's set up for you. And if you don't like the numbers, you can click on their contact us, and you can get the exact phone number. But it's just 877-77-NADEX. All right, so that's how to get a demo account and a live account. Another thing you're going to want to do is you're going to want to learn more. A lot of you came in, over half of you barely understand the spreads. So how can you learn more without having to pay anything to do so? Hop on over to ApexInvesting.com and click on Get Free Access. It says 50. I think there's probably like 250, 300 now. Just on almost any topic you can think of. And just click that, sign in. We have a lot of videos that aren't listed on YouTube as well. Inside the site, we have courses in there. And you just click that, log in. It's free. Takes a minute or two to get access. And when you log in, this is what you're going to see. A couple areas you're going to want to go, like, hey, are you recording this webinar? That question always comes up. If you scroll on down to webinar recordings, this is where we put all the recorded webinars. So if you go to, say, bonus webinar series 3, that's where we put the Monday night webinars, then you'll find it right here. This will be uploaded probably tonight or tomorrow at the latest. And color sort of gets a little darker right here. But I talked about how to hedge futures and Forex with Nadex spreads. And we'll add in, other webinars as well that you can access. Sorry, I wanted to make sure there was one added on there. But we got the hedging strategy. Nadex spreads made easy. This is definitely a webinar you're going to want to watch if you're new to spreads, okay? Nadex spreads made easy. And I walk you through exactly how they work and all the differences. I talk about the different spreads and binaries. And I go basically just what you need to watch that webinar. If you don't think you're an expert at the webinar, you should watch or at the spreads. You need to watch that webinar. Even if you do think you are, you might want to watch the webinar because you'll pick up some stuff. And if you are a futures or forex trader, you can watch the futures one, and it actually teaches you how to hedge with Nadex spreads. So sort of like buying a put on a stock. So I teach you how to do that, but for day trading instead, and a lot more effective as well. And so we'll add some stuff in there. If you ever see anything you're looking for, you can't find it, you can ask in the forum. So right here under questions, trading question forum. Go over here, and we have a ton of information. And whether it be about trading psychology, money management, what can I trade at what time of day, what type of accounts do I need to set up, and computers and internet access, trading communities, trade rooms, things like that. As far as actually reading the charts and understanding what they are and how they work. What are the different ways I can use binaries? What are different rules I could use for entry and exit? So, and how do I read the markets in general, like just news and things like that. And then going into scan. Scan is how do I know which one to select, which binary, which spread. Putting it all together, and then going back and looking over your day and seeing what you did right that you should repeat, and what you did wrong that you should not repeat. And if you don't know where to post, just post it in the general forum. And, usually, this was a holiday weekend, so I got a little catching up to do, but you can post it in here, and usually within a day or less, sometimes within minutes, me or another trader is going to reply to you and help you out. If you also want to make sure you get really just a solid foundation on Nadex, you can go to these videos, like getting started with Nadex, Nadex platform tutorials, how to use the platform, the mobile platform, the web-based platform, what the fees are, how everything works, the leverage, the margin, all that stuff is all going to be answered for you right there. The spreads, the binaries, even contract specs. So I go into some of those for you. So a lot of resources on this website. I have a radio show every day. Be happy to have you on as a listener. And you can even tune in directly through our website and see my screen as I'm going through it. Sometimes I go into live trades. Sometimes I do very topical based. And sometimes I'm just setting up the week. And today I just talked about here's the news we got. Here's the trades we can do. And, I had a caller call in and ask a question about bonds and their effect on the market and what made the market rally. And so we talked about that. And but basically, it's, live market commentary every day in there that you can take advantage of. If you don't have a platform with real live underlying data, I'm not talking about like web-based charts, okay? And I'm not talking about Nadex charts. I'm talking about actual live data, not CFDs and things like that, but live futures data. Live Forex data with real volume. A lot of traders make the mistake of not using volume when they trade Forex. And so we teach you how to get the access to futures data, how to get the access to Forex data, live data, free platform, everything. Just go over there and watch that first course. It'll get you set up and get you going, okay? So we have a lot of courses in here on different things that you can learn. All the courses are free. So that ought to help you get up and running, but just a massive amount of information. And it's all, we're working on reorganizing the site constantly, trying to make it easier and easier to find what you're looking for. It's just we have so many people from so many different levels looking for so many things. And if you're ever lost, you can just ask in the forum. Also, you can ask in the help desk. But help desk is really like, tech support questions, billing questions. If it's anything else, trading related, trying to find a video on this, whatever, best place to ask is inside the forum. Because if you have the question, other people do also. And so that helps everyone learn at the exact same time. All right, well, that gets us past all that, gets us going. The one other thing we'll be showing this and talking about this today and using this is the scanners. So you're going to want to go over here and check out the spread scanner and the tutorials on the spread scanner, which are up at the top. But scanner tutorials. But right here, this actually feeds all the data in live from the Nadex exchange and does all the math for you. So you can look at multiple expirations, you can look at multiple markets, and you can get all the information you want really quick, really easy, without having to do all the math. So it's just live updating profit, loss, distance, everything, all the little things that you need to know about trading spreads that I use constantly. It makes it a lot better. So you're not guessing that you have the best spread. You know you have the best spread for your trade. All right. So with that set up, let's get into the topics for today. We're going to be going into tips and common misconceptions, both, about trading Nadex spreads. I'm going to talk to you about, why, at least do I think, Nadex spreads are better than futures or Forex. Why do I think they're better than stocks and ETFs? maybe what are some of the, reasons you wouldn't trade them? How would you trade them? And a lot of that's just knowing how to use the right one. How Nadex spreads work differently than options, and how they work similarly to options. Okay, and then just some top tips that we'll be interweaving throughout it, and as well as misconceptions that can easily hold you back. I've seen traders come in and try them, and they're like, "Oh, these are horrible. They're not working," and they don't understand the contract. And it's come up. I answer a lot of questions in various forums on our site, but of course other sites as well. And I find out what the common misconceptions are, and I help them out quite a bit and try to go, hey, check out this. You need to look at this. This is a misconception you have. One guy's like, is it just me? Or I'm like, yeah, it's you. So you just need to change this up. Something else that can help you out quite a bit as well is I have an article series, goes up on Benzinga, also goes up on Yahoo Finance, and I talk about spreads and binaries, and there's a ton of articles on here, and I'll put that list for you. Feel free to check those out, and but they're really helpful. And there's one about misconceptions about binaries. So we'll actually have a webinar on that next month and go into even more detail than what's on that short article. All right, so first let's knock out really quick what is a Nadex spread, and I'm not going to spend an incredible amount of time on this because if I do, we're not going to be able to dive into the spreads as deeply as I want to for you to make the most of your time. So what I'm going to do is I'm just going to open up a really, let's see, let me open up a chart. And once I open that up, then there's a few things that I want us to be able to look at together on here. So let me remove a couple things to clean this up and get that knocked out. Okay. And I'll start with a basic chart and then we'll come back over. I think that might be easier. So let me go to the chart, and we'll go to, I guess right now, since we have the Forex markets open, we'll focus on Forex. One thing I want you to know is if you're not a Forex trader, it doesn't matter, okay? They're all the same. All the spreads work the same. Everything's a price moves up and down. That's what matters. Can you figure out how to figure whether it's moving up or going to move down or going to stay flat, and how can you take advantage of that? Don't worry about what the label is. Like, don't get married to S&P. Maybe Russell's better. Maybe DAX is better. Maybe you should be trading the US yen and not the euro dollar. So there's a lot of things that you can pick up that can help you quite a bit. And I just see a lot of traders make the mistake of getting really, really tied in, to one instrument or one type of instrument because they feel like they don't understand that. That is one of the biggest advantages of trading on Nadex, is it's a whole lot simpler. Okay? Let's see here. Bring this up. I'm just going to do a basic one. And yeah, nothing on it. Okay. So we got euro dollar, just as an example. And let me add in just a drawing tool on here so we can knock out what Nadex spreads are real quick for you. For you, those of you that this is completely new. Now there's two places you can go to find your spreads. You can go to the Nadex platform over here, or you can go to the spread scanner, which is free to use, 100% free to use inside of our website as a free member. So if you go to the spread scanner, again, that's under scanners, and then spread scanner down here, and we go down and we're going to select whatever market we want. Okay, so let's say we want to look at euro dollar. So right there, that'll bring up euro dollar for us. And now it's feeding all the spreads in for us instantly. We also have the ability at the top to choose a couple things, such as live or demo. Now you could choose to log into live. You're going to have to log into live and demo for it to, if you want to submit orders. Like you'll be able to actually click on here and open a ticket. Okay? So if you want to open a ticket directly from the scanner, you'll have to be logged in because it's just one browser talking to another there. But you can choose live or demo, and you'll get the live feed or the demo feed. So there's actually two different data feeds. You can also set the default quantity. And then down here, there's all these filters. Don't let these filters intimidate you to begin with. Just don't use any of them. Okay? The other place you can go is you can go over to the Nadex platform, and you can find Forex. You have to go to bull spreads. You're going to have to find the contract like euro dollar. And now you have all the spreads that you can choose from. Okay? So currently we have what, 10 different spreads. To look at those spreads, you can either look at them here. If you want to see the prices, you're going to have to click on the time, and on the time it'll list the spreads, and then you can do the math. You can open them up and let the platform do the math. You can look at the size and the offer, which you can also do by opening a ticket. But you have to go through each one of them. So you have to go through like the 11 o'clock one, the 8 o'clock one, the 9 o'clock one, and the daily one to review all 10. My problem with this was I had a buy signal on my chart. I want to buy now. I want to find the best spread quickly. I don't want to spend 20. I can't spend 20 minutes. My turn will be over in 20 minutes. So I need to find the best spread as quickly as possible. And a lot of times I'm trading more than one market. Maybe I'm trading 2, 3, 4 markets at a time, maybe more. And I can't afford. I mean, that's a minimum of 3 clicks, and that's if you're doing the math and remembering everything. Probably 4, even if you're using the daily. So 4 clicks to be able to get all the information, and that's if you do all the math in your head without opening up tickets. Or you just go right over here, and here's every spread listed. Okay? So as you can see, it's a lot simpler. It just looks like almost intimidating at first, but it really is not intimidating. What you're seeing price. So here's the price of the euro dollar. Okay? And so on the price of the euro dollar there, you'll want to go in and, let's see, let me put this up on here. Okay, so the shading, let me zoom in, make it easier. The shading right here, that is the price of the live euro dollar. Okay? And to get rid of all those colors, I'll just click on one of them and it'll select just one. Makes it a little less intimidating. Go down here, and the price this is the price of the euro dollar itself, like 1.34, 35, 36, 37, okay? And then on the left side, what you'll see is the profit and loss. So if I bought this spread, I could make up to $40 if the market went up, or I could lose, down to $58 if it went down. Different ones are obviously going to have different risk reward. That one, obviously, I couldn't make a whole lot on, only $3. I could lose $245. Right? If I go over here and choose this one, I'm only risking $5. I can make $93. So would that be the better one? Well, maybe. And that's what we're going to talk about. How do you know which one's the better one and why is it the better spread? But what it does, it sort of lets you visually see the profit and loss graph based on how the market moves. It also lets you combine them. So one thing I teach iron condors, I teach straddles quite a bit, and I show them in our news plan up here at the top. We have a plan on news, and that's free to access. And but I teach how to put them together. So if you were to go in and put a couple of these spreads together, then it'd show you like that's a straddle. So now you can make money if it goes in either direction, as long as it moves far enough to cover the cost of the other side of the trade. On the right side, I tell you, especially if you're new, this helps. What is the market it's following? It's not following 6E. It's not following, things like it's not following the ETF on euro dollar. The underlying symbols there are euro dollar. The spot symbol, I also show it to you like on Ninja Trader. I show it to you for generic, Euro/USD. I show you the Nadex, the tick size and the tick value. A mini lot, which is 10,000 units, the tick size is 0.001. Now there can be also referred to as pip size, and the tick value or pip value is $1. If you don't know what a tick or pip is, just to make that really simple for you, a tick or pip is the minimum thing something can move in. So a stock has a tick size of 0.01, 1 cent. The value is 1 cent. Okay, so that's the value of it, and that's the size it moves. So this moves in 0.0001. Why isn't it quoted in cents or whatever? Well, because you have different currencies. You got things quoted in yen, euros, and pounds, and francs, and Canadian. So you can't use the word penny because it doesn't apply to every currency. Pip is usually what's used in Forex. Tick is what's usually used in futures contracts. So if I go over here to say crude oil, it'll tell me, okay, crude, well, it ticks in 0.01. It's worth $1 a tick. Oil, the underlying contract, which is currently CL0714, and one thing you'll notice is you actually see the word July in the oil contract down here. So I have the word July. Well, that's because it's following that July contract. So you always want to make sure you're looking at the right futures month. We teach you all this stuff as you go through our courses. CL0714 takes in 0.01, or what we think is a penny. It's worth $1 on Nadex. So 1 penny move is $1 on Nadex. It's $10 on oil. So you'd have to do 10 Nadex spreads to make it equal 1 oil future contract. Okay, so that's the P&L graph. That's the information box at the top. Down here, to make it easy so you don't have to pull up 30 different things, we got the expiration in minutes. So right here, this is how long is it going to be till contract expires. Obviously, oil right now doesn't have intraday nighttime contracts, but your currencies do. So if we take oil off, we'll go back over here to say euro dollar, and you'll notice that all these currencies, we have different times that they expire at: 32 minutes, 90 minutes, 212 minutes, 1100 minutes. Tomorrow. So how much time is there to expiration? Makes it really quick and easy for you. And then over here, like how wide is the spread? That can be useful for certain strategies. Just maybe you want a narrow one or a wider one. Like a Iron Condor, you might prefer a narrow one if you can get it, because it'll limit your risk even further. And then the name of the contract, I got what's called at the market, which is basically where the spread is closed, basically priced within 10 ticks of where the underlying market is. So you can see right here it says 4, so that's less than 10 or less. So it's considered to be very closely priced to where the market is. If I uncheck it, and I pull it up, then what we do is we subtract the basically the ask price from the actual underlying instrument, the euro dollar. So the euro dollar is at 36? I guess 28 on last. This is was that last or was that 38? Let's see here. Pull it up. And just reopen that up. Let me open up my Forex side. There we go. Okay, so I'll open that up here, but I can also just open a ticket, and we'll see the Nadex indicative. Now, this is not the actual FX pair. Okay, this is how do I put this? This is it's what they call a settlement price, and it's they take the last 25. If it's futures, they take the last 25 trades. They average the middle 15. And that's the indicative price. They do that so you get a fair settlement price versus like one trade popping the thing way off. On Forex, they take the last 14 middle quotes, okay, the mid quotes, and they get rid of the sequential ones because you can have 1,000 of them in a second and a millisecond, and then they average the middle 15. And again, to accomplish the same thing, because bid-ask spread on FX can get really wild. And so they don't want, obviously, prices changing like 10 ticks. That wouldn't be very fair whenever figuring out the settlement price. So to make sure there's a leveled off settlement, they use that process. So we have a video under the basic education and Nadex on that. Every exchange has a settlement process. So this is their settlement process. It's just important to understand that that is a different quote than the actual market. So you'll notice it says 36.35, but if I look at euro dollar, it's 36.34. And we're getting 36.37, and notice the difference there, 36.34 and 36.37. What you're able to see is, let me make that a little bit larger for you, because I know you can't really read that font at all. All right, so 36.34 there, 36.37, that's where 3 comes from. That's the difference between the price, okay? So see, it just changed by a tick and changed by a tick. All right, so that's where the price comes from. We get all that. Now, what else do we got? Well, we have max risk, max profit. You can't lose more than what you put up, and your profit is capped. It's not a big deal. That's a big misconception we're going to talk about. And what your reward-risk ratio is on the trade. Okay, so that's the scanner as in a quick summary. We'll talk about how to use it more application. We talked about that a lot last week. And let's see here. So right over here, we're going to go in, and we're going to actually put up a spread. And let's see here, if we go on to this and move this over, then what we can do is we can see what the spreads are. And so I can see, like right here, we have, we'll take this lower one, 36.33 to 36.38, okay? So, again, that was 36.30 to 37.30. I'm like, that'd be a really small spread. I think I was reading the bid-ask there. So if we go over here, we draw it on the chart, then what we're going to get is basically a box, okay? And the spread is going to expire at 9 o'clock. Or that one expires at 8 o'clock. So we'll look at that one. It expires at 8 o'clock. That's fine. 36.30 to 37.30. So let's go over here, 36.30. Okay, we'll have to bring that up, and it expires at 9 o'clock. So pretty soon here, 8 and then 9, 2100. We drag this down. And a lot of times just drawing the boxes on the chart makes it a lot easier to understand. Okay? So right there. So you can see it goes way up, plenty of room. And I can even move it down here. So I'm trying to get it all on the page. There we go. Alright, so on this trade, I can currently buy it at the price of $36.38. So if I can buy it at $36.38, then let me show you how to calculate your risk and reward. Because once you get done these basics, and again, I cover a lot of this in the past ones, but I want to make sure you have these basics. If I can buy it at $36.38, so right just a few ticks above, like 4 ticks above right now where the market is, and that level is right here, okay, then I cannot lose any additional money, okay, below the floor. Well, how much money can I lose on the trade? Well, if the price is at $36.38 and the floor is at $36.30, who can tell me what my risk is on the trade? And if you're like, I don't know how to figure that out. Okay, well, the way that you figure it out is you just look at what the price is minus the floor. And it's really cool because every tick on Nadex, I don't care if you're trading Aussie dollar, US yen, S&P, NASDAQ, DAX, whatever, every tick is always worth $1. Okay? So you just, what is a tick? It's that minimum move. So to subtract that last digit there, what do we got? We got 1.3638 minus what we call the floor. The lower level is the floor. The upper level is the ceiling. The left side, say where you get in, where it starts. The right side is where it expires. So 3638 minus 1.3630. That gives us 8. So 8 pips, 8 ticks, whatever you want to call it. Every one of them is worth $1. And so it gives us $8 exactly. So you got it, Austin, Kevin, John, Sam. So Brent, awesome. So exactly, it's $8. $8 is your risk. It doesn't matter what the market does, okay? The market could fly down here. The most you're going to lose is $8, and you still are in the trade. Okay, now you can get out whenever you want to, but I mean, it's worth nothing now. There's no reason to get out. Flies back up, you get out, it could still be profitable. Okay? Now, it's not like a binary. It's not an all or nothing. So, if you buy it at $36.38 and let's say it expired at $36.40, you'll get the difference. So, what would be your profit if you bought it at $36.38 and expired at $36.40? How much would you make? It's 2 ticks above the price. Yeah, $2. Okay, if you bought it at $36.38 and it expired at $36.32, what would be your profit or loss? So you bought it at $36.38 and it expired at $36.32. So perfect. Yeah, exactly. Yeah, you'd lose $6 on the trade. It's just 6 ticks. That's the difference. It's 6. $36.38 minus $36.30. So if you're wondering why I'm not quoting the 1, it's really there's no reason to. You quote this last. Really, you can just quote the last few. But 1.3638 minus 1.3630, all right, or 3632 in this case would be a $6 loss. Now, if I went in and I bought it and I decided to get out at 36.78, okay, so bought at 36.38 and I got out 36.78, what would I make or lose on the trade? So let's take 36.78 minus 36. There we go, $40. Perfect. Okay, so I could get out as soon as I want to. Okay. Well, what if I got in and it expired up at 3,900, just way off the chart? What would happen? What would I make on the trade? If I bought at 36.38 and expired up at 3,900. Or sorry, not 39. Yeah, up at 3,900. So I would make money. It doesn't have to expire inside the spread for me to be profitable. It can expire outside the spread. It's not like a touch, no touch, or something like that. So it doesn't have to expire inside of it. So if I have $8 of risk on the trade and I go in and I subtract the ceiling, because that's my maximum profit, okay? So we go in and we just pull another calculator up. Again, the scanner's doing all this for you, okay? But I just want you to understand it. It's going to go up to the ceiling, up to 3730. So remember, 1.3730 minus 1.3638. So 92 would be my profit. I make $92 on the trade. All right? So good job. Yeah, Brent, Greg, you got it. Mark, you got it. And let's see, Sam, does that make sense there? So like the 92? And, but yeah, so it caps out. So you do get capped out. If some people go, oh man, so you're telling me they're going to limit how much I can make? All right. If you're asking that question, you probably haven't traded that long, because how many trades have you done in the last week that lasted a couple hours or less than a day where you made 100 pips on the trade? You know? Probably not that many. Does it happen? Yes. Can it happen? Yes. What does that mean? That means that you maxed out the spread. There's a new spread every single hour on euro dollar. Okay? It's like there's one at 6, one at 7, one at 8, all the way. I mean, the last one expires at 5 and it starts back up again at 6. Okay? There's new spreads constantly happening. Actually, they go to 3, sorry. So, till 3 o'clock. But there's new spreads every hour. So, if it does fly up, you could always buy another one. Okay? You can roll into another contract. Also, you could do what's called hedging. You could, basically do the opposite of this. And you could sell this spread. Okay? And you could buy FX and use that as a hedge. FX is still going. You're trolling your stop. You don't even need this spread anymore. You don't care. So we talked about that 2 weeks ago. So does everybody understand that there is a risk, which is the difference where you buy and the floor, and the that's the max risk. The max profit is where you buy and the ceiling. That's all if you're buying the spread. And then the difference, okay, of where you get in and get out, or get in and it settles, but no greater than the max risk or max profit, will be your profit and loss. All right, so if you have any questions on that, you got to let me know. Else I'm assuming that you got it, or you're like, hey, I'm going to go watch that Nadex Spreads Made Simple video. So hopefully you're on one of those two paths right now. Okay, either you're there, or you need to go watch that video. Okay, so now we got the selling spread side of things. And pull that up. So if I go over here, and I grab scanner again. And let's see, let's look up sell spread. So look this one up right here. Here's okay, we'll leave the 11 o'clock one. All right. And we'll pull up the euro dollar again. And then let's just get rid of all of our little drawings. This one now is going to go to 11. So right there, got to go to 11 o'clock. And, let me bring that back up. And put this on top of it. There we go. Okay. So with that right there, looking at the 33.90 to 36.40. So this thing goes way, way down. So there are bigger spreads. Understand the longer it is for a spread to expire, the larger the spread will be. Okay? So if the spread starts and expires within 2 hours of starting, it'll be like 100 ticks wide, in this case on euro dollar. If it starts at 6 and goes to 11, that's more time. It's 250 pips wide. If it starts at 6 and goes to like 3 o'clock the next day, it's going to be 600 pips wide, because the more time there is. And then we go over here and go, okay, well, so what does this mean? 33.90 to 36.40. So I'll go over here to 36.40. And this spread started at 6, so I'm going to start drawing it right here at 6. And it goes to 11 o'clock. We're going to have to give ourselves a little more time here. So 11 o'clock. Bring it on over. Bring it on down to 33.90. Okay? And that is literally what our spread looks like. So how do you squeeze the charts on Nate? There's a couple ways to do it. You have zoom in and zoom out buttons where you can highlight an area. You also can just put your mouse on the time or the price, or you can hit control up and down to move it. So control and click. And then you just hold the mouse down. So I have control and I have my left mouse down. I can move it, or I can stretch it like that. And then I can resize it by hitting the focus button right there. Okay, so if we go in, no problem. If we go in and we're looking at this spread and we're looking to maybe short the euro dollar, okay, then what is going to be our risk and reward on the trade? Well, I can sell right now for 36.30. So if I can sell a spread for 36.30, right, pretty much like right there, okay, and my risk is up to the ceiling, that's my max risk, which is at 36.40. If I can sell at 36.30, goes up to the ceiling at 36.40, what is my risk on the trade if I sell the spread, my max risk, worst case? So 36.40 minus 36.30 is how much? $10. There we go. So $10 in risk. That's also $10 in margin. Okay? So versus like putting up a couple $100 to actually do a euro dollar trade, which you'd have to do right now if you're going to trade spot Forex, for a mini lot. Okay? $1 a tick move. You'd have to put up a few $100 or 200 something dollars to do that trade. The exact amount you'd have to put up, well, if we open up a calculator and we put in the price, 1.3634, we multiply it times 10,000 because it's a mini watch, 10,000 units of currency. We divide it by 50. So you'd have to use $272 to do that exact same trade in spot Forex is how much money it would tie up. Plus, if it goes negative, if you're losing any money in the process, that number will increase. That's the starting amount of money just to open the position. And then they're going to deduct any losses live as well from your account. In this trade, we're putting up $10 to do the trade. Okay? So right there, that right there is how to actually do the spread trade. Okay, or how to go short. Now, if I went short on the trade and I sold it at 36.30 and went all the way down to 33.90 or 3,300, how much would I make on the trade? 36.30 sell all the way down. Williams on it, 240. Yeah, because it's 250 pip wide spread. If I know my risk is $10, the difference. See, it's not 60, so it's $240 on the trade because it's a 250 pip wide spread. And again, the math is really simple. Once you get it, it's like, I mean, it's really basic addition and subtraction. So it's just 1.3630, which is the price we sold at, down to the floor of here we go. 1.3630 minus 1.3390. Maximum profit is, we dropped off a decimal there, but 240 pips on the trade. So $240. So all the way down, which is $33.90. So now you're right, that's $33.90. So, but if you sold at 36.30 and you went down to $33.90, then that's where you'd get the 240 pips. So it's just between the floor and the ceiling. That's why it's a spread. Okay, there's 250 pips between the two. So it's not like binaries that are capped at $100. If it expires like a tick against you, you lose like $1. Okay, a tick from where you got in at. You don't lose everything. And you can use these for premium collection. You can use it for straddles. You can use it for strangles. You can use it for hedging. There's a lot of ways that you can use them. And you want to make sure you pick the right one for the way that you trade. But they're very simple. They're very effective in their leverage. I mean, $10 to control 10,000 is 1,000 to 1 leverage. That is insanely massive. Okay? And I've went through it. Like I said, I've done some of these articles. I'm going to bring up just some of the screenshots on them for you so we can go through some of them with you. And I just want you to see some of the things I'm talking about misconceptions. Okay? And so let's, I don't know what that is. Hold on here. Gotta be careful when you're just randomly typing something in. Like a Christmas tree, or I don't know what it is. Which isn't a bad thing, but. All right, here we go. Binary, there we go. Yeah, so we got, they're under binaries, but. So we got leverage here. And I got the stuff about the spread strikes. Okay, so. On this one, what I talked about was actually, this is what I wanted to show you when I was talking about leverage. I went in and I basically equalized ETFs, spot FX, futures, options on futures, okay, on the euro dollar, and Nadex spreads on the euro dollar. So all of them, what I did is what's the minimum size? Well, in euro dollar futures, it's 125,000 units. So I went in and basically did $125,000 worth of FXE, which is the ETF on Eurodollar. I went and did 1.25 lots, which you can do on some brokers. I went in and did one future contract. I also did one contract, because you actually buy 125,000 options. It's really weirdly priced. You drive 125,000 options for one contract on 6E. And then on Nadex spreads, obviously I had to make it a half. I know there isn't a half on spreads, but just to equalize it. Otherwise I would have had to double all the numbers to get them perfectly equal. But 125,000, okay, is the leveraged value across all four of them, or five of them. And on ETFs, I'd have to put up $31,000 to do the same trade we're talking about for $10 right now, okay? On spot Forex, $3,000. So it was at a little bit different price then, but also it's a lot larger amount, but about the same. If you divide it by 12, it'll be pretty close to where we're at. But $3,100 in margin. That's just to trade it. Okay, that didn't include the fluctuating P&L that happens when you're using margin. On 6E, $500 for intraday. Okay, trading. So which is what you need to be doing on Nadex spread. So $500. So pretty good, leverage. Options, $2,500. Because why? Because there's at least a week or more until expiration. Okay? Or maybe you may have 4 days, 3 days, 2 days, 1 day, but there's only 1 day of the week you actually have. Only 1 day of the week would you actually have the ability to get a 1 day till expiration option over on the CME. And that's even if your broker has it. Okay? That's your day trading margin. By the way, day trading margin, to get that margin, you have to have at least 25 grand in a stock account to be able to do this. And leverage 4-to-1 on the ETFs, spot 50-to-1, 6E 250-to-1. That's nice. So we went from 4-to-1, meaning like for every dollar I'm putting up, basically, it's like I have $4. Well, over on spot Forex, it's like every dollar I put up, I have $50. Okay, well that makes my little bit amount of money get larger. For every dollar I put up, I have $250. So that's even better over on the futures. Options, people think it's 100-to-1. It's not 100-to-1. If I put it up, it's 49-to-1 in this case. It can easily be lower. And then on Nadex spread, it's 500-to-1. And we showed you one just now that was, literally like 1,000-to-1. So massive leverage. Okay? Now, what if it flew up from where it was currently priced at? So this was obviously a big move, and I'm just trying to, give you a full, filling of the example here. But it flew up, and in this case, I want to say it was 240 pips from where it was. Maybe a little bit more than about 240. Then we make $3,000 on the ETF. So we put up 31,000 to make 3. And that's not our risk, that's just the margin. On Spot FX, we put $3,000 to make 3. Again, not our risk, just our margin. So we may have to have more money if it drew down. Futures put up 500 to make 3. That's a lot better. Now I'm putting up less money. I'm getting more for the money I'm putting up. But again, that's not my risk. It's just my margin. Okay, meaning if it goes $500 against me, now I got 500 out and 500 down. I close the trade, then they'll give me my 500 margin back as long as I don't get what's called a margin call, which means I owe money. That's a bad thing, which you never can get on Nadex. Futures options flew down, or flew up and started to make $463. Why? Because there's days until expiration, so it moves really, really slow. You don't get the speed. People think, spreads move slow. No, they don't move slow. They actually move really fast, okay? They're an option. They're a type of option. Then we actually look at the Nadex spreads. I put up $250, considerably less than everything else. 500-to-1 leverage. Make $2,800. So almost, in this case, like 10 times the amount on this trade if it flew that far and you had that wide of a spread and all that fun stuff, okay? And the reason I capped it at 27.40 was that was the ceiling of the spread. So I'm just trying to show what's the maximum potential value across all of them, equalized. If the price moves down, lose $3,100 on FX, lose $3,100 on spot, lose $3,100 Eurodollar, lose $1,250 on the option. So I still have another, $1,250 in risk, but I'd be down $1,250 on the option. On the spread, the worst case, I'd be down $250. So I'm putting up less money than all the other methods here. I'm getting more leverage, more buying power. I make about the same. The little bit I don't make, to me, is highly worth the little amount of risk I have on the move. Not getting stopped out. I don't have to worry about it getting the speed compared to an option. having the risk coverage so I can't get margin called compared to futures, spot, and potentially, FX, even stocks, depending upon what kind of leverage you're using and margin that you have. So there's a lot of benefits right there. Very, very simple, but it helps out a ton. And then, let's see. So I got a couple questions. Let's answer these real quick. How often do you trade these? Pretty much every day. So, of course, there's days I don't trade, but, I trade the spreads daily. I love trading the spreads. I trade them all the time. So we trade them in a room. I love trading the spreads. And you need to know what you're trading and why you're trading and how it works, but yes, the thing that I would caution you on with it is a big misconception traders have is that these are futures. Okay? They are not futures contracts. They are spreads. They're an option. So they're not the exact same thing. What does that mean? How does that impact you? Well, one, in this case, it means we have less risk and more leverage, which is good. But two means it's not going to move at like 1-to-1 all the time. Now, some of the spreads, the spread's moving basically, it's like 4 ticks away. That means it has a little bit of premium in there, a few ticks of premium. You don't have to cover the premium to be break even, okay? Because premium doesn't go away just because you get in a trade. And premium is what is known as time value. So, to help you understand this, because this is a massive misconception, okay? And the massive misconception people have is how far does it have to move to make money? And what they do is they look at the risk and they're like, oh, I like this trade. And let me show you an example of something that has a lot of premium built in because that's a lot of time. This oil trade over here, 35 ticks. Well, 35 cents actually isn't a big move for oil. You got till 230, so that's not horrible. It's actually really lowly priced right now. But if you get in a trade that's 35 cents out of the money, then 35 ticks away from where the market's currently priced, then that spread price is going to move pretty slow while it's working on getting there. I did a forum post recently. Let me see here. I'll show you this over in Apex to help you get down this concept. And like I said, this is just general misconceptions, going through some things for you. And keep posting your questions. I'm not ignoring them. I definitely will be getting to them, okay? I'll be helping you out. So let's see. If it's in here, or maybe it's in a new one. You can see where I talk about spreads versus regular futures and stuff like that. And okay, so let me just it's like a brand new one we put up just a few days ago, but we have a lot of new stuff in there with the forum from the weekend. Yeah, price speedometer. Here we go. I made this up for one of the articles. It's going out this week. And basically, what it says is I made this up for an article I'm doing. Robert, one of our traders, had an idea of making one for binary, so I was like, hey, let's adapt that and also add it for the spreads. It's called Delta. Delta is how fast a option will change in price based on the underlying market's move. Thing is, you don't have to worry about it a whole lot because it's the same day of expiration. Okay, so it gets to 100 really quick. But what people don't get is, like, if it's way out, if it's like 30 or 40 ticks away, that proximity we were showing, if it's way far away, it's going to move slow. Okay? If it's right at the floor of the ceiling, it's still going to move a little bit slow. So maybe the market moves, 20 ticks and it moves 10. So that's a 50 delta. It moves like 50, cents for every dollar the market moves. And then we got the center of the spread. So right here, this is like where you're going to be at the fastest rate. So the closer you get to expiration, the faster this number gets to 100 in this green zone. Okay? So if I'm like 8 hours away, it's going to be like 50, 60, 70, 80, 90, 100. If I'm, an hour away, it's going to be like 50, 70, 90, 100. Okay? If I'm 30 minutes away, it's going to be like 50, 80, 90, 100. So that 100 will be a bigger zone. It'll move faster. That's okay as long as you understand it. And all you have to understand is what is that proximity. Okay? So the lower that proximity is, the faster it's going to get to 100. That's what matters to you. Okay? Now again, it'll slow down on the other side. And there's something else people don't understand. So if it's going up, it'll be like 100, and then 90, 80, 70, 60, 50, meaning it won't gain as fast in this top half the further away it is from expiration. So the best place to buy a spread, literally, if you're gonna pick a spread, and if you want the big move, this is not, there's scalping and there's straddles, there's all sorts of different strategies, but if you're just directionally trading, really is somewhere like in this zone if you're buying. And if you're selling somewhere here, even though you'll give a few ticks on the movement, it'll get faster and faster and stay at 100 longer and longer. So you may get in there and like out here. Okay? That's just rate of change. It's called delta. And I go over that in a lot more detail in the last couple of webinars. So does that make sense though? Like it will go faster just because it's an option. There's time value. And why is there time value? Well, because somebody's on the other side of the trade. And guess what? That someone can be you. It's not Nadex. Okay, Nadex is not on the other side of your trade. They're just an exchange. That's another misconception. They're not trading against you. They don't make more or lose more if you win or lose. Okay? People go, well, they want it in the money or out of the money. Or whatever. Every market's always either in the money or out of the money, depending on what side you're on. Okay? So, it's always going to be an in the money or out of the money trade. Because if I'm buying, it's in the money, and that person's selling, they're out of the money, it's always in the money or out of the money. They have no interest in you profiting or losing, which is good. That makes them neutral. That's why they're an exchange. And then the other side of the trade is other traders who could be collecting the premium. That maybe you're going and you're paying the $10 and they're collecting the $10, or it could be a market maker. So, which is just a big trader. Will the proximity be 0 at close? It'll be pretty close, but it won't be up because it'll be closed. And this drops off anything old when new stuff comes up. It may not be 0 because you may be out of the money. Like what if, like right here, this spread right here is out of the money. Where the market's trading at right now. You got oil currently sitting at, like if it'll pop up for me. On demo, let's see, let's click live. Live is a little bit different than demo. And let's see here. Let me open this up. We'll just flip over and I'll show you. Here we go. It finally populated. Just took it a second. So like 104.13. Well, if we look at this trade, the ceiling is 104. So if the market's at 104.13 and the ceiling is 104, then it still will be 13 ticks away from where the market is, right? Because that'll be the settlement value. The price will be 104 at settlement. Because it can't go any higher than 104. It's a spread. The ceiling is 104. So if the market's at 104.13 at settlement and the ceiling is 104, it can't go any higher, so it wouldn't be 0. It'd still be 13. So it's the difference between where the price of the spread is, which can't go higher than 104, and where the market's at. Does that make sense, Carrie? Now, if it was in the money, okay, like these at the money, in the money ones, if the price was in between, then it'd basically be 0, yes. I mean, it may be a tick or so different, just because you have settlement, you have the last 25 trades, average of the middle 15. So it could be like a tick or two different. But sometimes it'll be a tick or two in your favor, and sometimes it may be a tick or two against you. Again, a tick or two is $1 or $2. It's not an all or nothing like a binary. So, great question, though. Let's see, question. Where is open interest shown in each contract? You don't need open interest. It isn't like a future Forex contract to know, like, what is the liquidity. If you just look at the actual platform, here, let's pull up the live one. 1 second here. One of these windows. It's a great question, though. Yeah, looking for like volume and open interest, it's not really something that you're definitely not going to be looking at volume. You don't care, which sounds funny. It's like, what do you mean? I mean, because I'm all about volume. If you've been on our sites, I teach you all about it. I'm big on using volume in trading, but it's an option contract. You care about liquidity. That is your concern. Can I get in and can I get out of a trade? Okay. And so usually you measure that by volume or you measure that by open interest. I don't want to take out too much of the share of the market, right, Todd? So I don't want to go in and trade like 90% of the open interest on a call or a put. So if you go over here and you're looking at them, then we'll look at some spreads for a second. Pull this up. You can see like what the offer and size is right there. That's the current market being made. We can go look at euro dollar, Forex. It'll be even more during the day. Like, it'll be a lot more. But we go over here. Look at this, and you can see basically any depth that's in there that you can trade. 50-50. Basically 50 contracts. What does that mean? Does that mean I'm capped at 50? Does that mean I can only do 50? No. What that means is that's how many are currently available. That's best quote. If I go in, I don't want to do this on a live account. But if I go in here and I put in a trade, like this is quoting at 36.37 by 36.32. So I say I'll buy it for 36.35. Then what's going to happen is watch how this 50 number up here, okay? You're going to turn into a 1. Or got 2 other. We'll make it turn to a 1, okay? Because I'm placing my order inside the bid and offer. So right there, notice that's 1 and now 50. So it's showing me the best price and the volume available at that price. If I want to see the depth, not volume, but the liquidity available at that price, the orders, the limit orders available at that price. So think of it like a DOM. Then I can open the ticket up. I can see up to 3 levels deep on that. Okay? So it's not just bid offer. But you need to be able to know, yeah, so when you get it, you want to know, like, what is the liquidity of that contract? I don't really expect it to change that much. Now, I can get in and get 50. I will out-trade it. Now, I do not recommend people do that to begin with at all. Okay? They need to get used to the product, be trading it well. Once you get it down, you can learn how to do that. You understand the risk associated. You also understand how to leg out. I will out-trade certain contracts, especially like commodities that are a little lighter. But I recommend that people don't trade larger than the bid-ask spread until they have, not the bid-ask spread, but the bid-offer size until they have the experience on how to outdo that size. But I can buy 50. I mean, I can do that right now. Let's see here. I'll go in and we'll sell 50 of these, okay? So if I sell 50 of these contracts right now, 36.31, it's like $450 risk, and I put the trade on, I took it out, okay? And then what will happen, now this will happen faster over in the live platform, usually because there are multiple market makers. This is just it's a demo account. It's a video game, whatever. And then usually, sometimes it'll happen in seconds. I did it last week. I took out the book over and over and over and over and over again. I couldn't believe they kept filling it. I was like, this is nice. But, this is just a computer program. It's not a market maker. But usually within about 3 minutes or so, it'll refill with that 50 again. Sometimes it's within seconds. And it depends on the market. That's why you want to get used to it. And if you cap out right there, if you stop at 50, you can start timing it and seeing, how fast is the market maker. There it goes. So now there's 50 back. So now if I want to add on 50 more, I could do, another 50 and throw that on and place that order. And now I have, 100 contracts. So you can get in larger positions and you can get out of larger positions. Just right now, if I want to get out of the trade, I can only get out. This is demo, so don't freak out about the P&L. I don't care what demo's for. But you go over here, and if I want to get out of 100, then what happened is I put it in there, place the order. It'll get me out of 50 of them at once. But say I still have 50 open, now I got to wait on that book to refresh on the other side. So that's why I say, bid offer, like you say, bid offer is great for entering, but I want to have some idea of what the bid spread might be when getting out. It's not really the spread. What you're asking about is not spread. What you're asking about is open interest. So, or I guess not really open interest. It's really you're asking about what's the liquidity, what's the size right now. And that size should remain consistent so long as it's a market that's in the money. For example, this market right here, this contract is not in the money. The market's down at 36.34. The ceiling is 36.40. It's below it. And so if you sold that, there's no value in it anyway to get out besides like a few ticks. If you bought it, so there's no reason to get in or out of the trade right now. But nobody's going to make a quote any better than that because what's the best way to put this? If you want to know when the bid offer size, I talked about this last week. If you want to know when the bid offer size is going to dry up, okay? See, now it filled my other half automatically for me. See, now they're gone and all my positions are closed. So I did out trade it and I did get filled. Not recommended though. If you want to know what the size is going to be, look at what the bid-ask spread is. It's about 5 ticks. So that's your bid offer spread, the difference between your bid and your offer. When the market gets to that point, like we're at 36.45, and what's the floor on this? It's 36.40. Okay? So 36.40. So 5 ticks would put us at 0. So who is going to sell you a spread, okay, for nothing? Nobody's going to. Okay? that's when your liquidity goes away. When your bid offer spread gets to or exceeds the floor or ceiling, it's going to drop from 50 to like nothing. And so if you want a safety net, add a few ticks in there. Add like 5 ticks in. So if it's at 36.40, when the price is getting down, I want to be out of this thing when the bid's at 36.45, because then I'll still have 50 contracts. But if I wait till it goes below, then it has to come back up some and reset, and then it'll go back to 50, and then it goes back down. You see the exact same thing in binaries. You'll get the bid and offer, and like one of the things I show people all the time, I go over here when we're doing binaries, because I tell them, like, don't be trying to get out at like $4 and $3 and $2. The price isn't even there. And it's like right here. See how this is like, $5, $8. So you'll have some quotes right here. So we got 20 and we got 5. We go to the 5s, where it's only $5. And right now we have 2 people in there. Let's go deeper where there's nothing. There's market makers making a market right now. Well, they're not helping very much. Let's see here. Let's try to get something further out. They may just be filling up the books right now. They're going pretty heavy on these binaries. Okay, normally what will happen is, and now this is also that's changing as a dynamic. Now they brought on 2 more market makers. They have 3 of them. When you get to that point, that's where your liquidity goes really low. So if you want to know where the liquidity's at so you can get out, figure out what the bid-offer spread is. And my suggestion, add like 5 ticks, a simple formula. Add 5 ticks to it, and you can just watch it. Watch the spread go out of the money, and right when it drops, like right down within like a tick or 2, and then all of a sudden you'll go from like 50 to 2 or 1 contract. And that'll let you know at what price you can exit the trade at. With at least a decent expectancy that there will be at least the bid and offer size there of the amount quoted. Does that help? So, because I had to figure that out too. It's like, well, if it goes to 1, now I can't get out and take my profit or, whatever. So, knowing that, where it's easy to take that. I mean, it's not that I'm going to be profitable. Things like deep in the money. But I went out of the trade and I want to free my capital up and I want to move on to the next trade. Okay, so how do I know which markets to choose for spreads? It depends on what strategy you're doing. So that's a big question, Melvin. If I'm doing news, we'll have a news trading plan up over here, and I'll post this up. And we talked about a couple trades already, but let's see here. What do we got coming up? We got the 27th, and so you'll be seeing the GDP report come up here for a trade tomorrow. We'll load up on there. But last week, like I said, I'm looking at pound dollar. Over here, I'm looking at oil. Over here, I'm looking at USD CAD. Over here, I'm looking at euro dollar. If I opened it up and it'll tell you the exact trade I'm looking at doing and what spreads I'm looking for and how much money I'm looking for on the premium to make the trade work. So there's an example of just news trades for straddles and iron condors mainly. If I'm directionally trading, it's what market do you like to trade? What system are you using? So, if you have a really small account and you're just starting out, use a low leverage spread like NASDAQ 100. This actually touches on a great additional misconception. The spreads on NASDAQ are a little bit different than the other indices. They tick in 1 like everything, but they tick larger than the future. So on the S&P, it ticks smaller. It ticks 0.1, so it's a little higher leveraged product. I'm not as big. I love the Russell more than I love the S&P, but still, it's a higher leverage product. The Russell ticks in 0.1, just like TF, just like the small cap on Nadex, all the same. Dow ticks in whole numbers, easy, the exact same as Nadex as far as tick size. But the US Tech ticks in 1, and Nadex the NQ contract ticks in 0.25. What that means is the NASDAQ has to move basically 4 ticks for you to get a 1-tick move in the Nadex spread. And notice the bid-ask spreads are tight. They're like, 1 or 2 wide. And they have, usually have a very low risk. You can go in on the trades. But, if you look at this right here, break-even distance is 15. Well, that only means 1.5 points on the S&P. If I go up here and pull the S&P 500, and let's drop oil off. Go down here, and, 5 ticks, 3 ticks, 1 tick, 3 ticks. That's nothing. 3 ticks, that's 0.3. Well, ES is 0.25 a tick. Okay? But up here, 15, that's not like, and this is Nadex ticks, by the way. This is not, futures ticks. This is 15 ticks away from the early market. That's a big move. Okay, that's a very, very large move, and that would make that a really not that great of a trade. Okay, the Nasdaq would have to move 16 points for you to make anything if you chose that spread. You could make. It would have to move 16 for you to make anything. You'd have to make by expiration, and that's a big misconception. I want to make sure I correct that. It doesn't have to move the 15 ticks. You have to overcome your bid-ask spread, right? So if your bid-ask spread is 37.34 by 37.36, that's $2, 2 ticks. You got to make those 2 ticks back to be break even or make a profit. But as time goes on, that proximity, that premium will go smaller and smaller and smaller, and eventually it'll be gone. Okay? And what this is showing you is basically you have to, if you have the thing to expiration, which I rarely ever have them to expiration, but if you have the thing and you held it to expiration, you'd have to move 15 points for you just to break even on the trade. And that's, again, only as of expiration. Make sure you keep that mental note. Only as of expiration does proximity apply. But it'll move. It will feel like it's not moving at all. You're going to see the Nasdaq go up like 6 points, and this thing's barely going to move. You're going to make maybe like $2 or $3. And you're like, what? Well, because $2 is bid-ask spread, okay? And say moved up 6 points, and it's out. It's pretty far away from the market, so that delta's lower. So it's not moving at a delta of 1. So it changed by a price of like say $4. $2 got covered by bid-ask spread. You're up $2, and the market just moved 6 points, and you're like, what? This is horrible. That's because you don't understand what that's for. In my opinion, this would be like a micro contract. Okay, if you have a really small account, if you don't want to take massive risk, understand that you won't have. And I don't mean massive. I mean massive. Like if you want to take really, really low risks, all the risks are capped. But if you want to take really low risk, but also understand that you're getting really low profits, but you want to do some live trading, you want some action in the game, that's a good place to start. If you're trading bigger sizes, either be willing to do like 20 contracts at a time and still understand the issues, or focus on other contracts like Russell. Russell's my favorite indice. After that, then you're probably going to be looking at NASDAQ, then DAX, then the Dow, then S&P, FTSE, and Nikkei I don't really trade that much, or the Japan 225. So I'm just not usually around at that time of night to trade. And it's a pain to get. I mean, I have the chart access on it, but it's a pain for most people to get the chart access because you got to pay for all that data, and it's just not worth it to most people. And then, what system are you using? For doing that trade. So you can't just go in and go, what market do I trade? Well, what time of day are you trading? Are you trading at night when nothing's moving, or is something moving? And how do you know it's moving? Well, I'd look over again at our news calendar, which you have a little idea of what's at least planned. So I can go over here and go, what's going out tonight that could impact the market? Well, there's some Aussie reports, some yen reports. Oh, Governor Kurata speaking. Okay. Yeah, he's actually doing that speech right now. Construction work coming out. These are not going to be massive reports. They'll be massive movers on the market, but they are going to impact the market. And so if I understand that, then I can hop in and I can look for trading opportunities on markets where I expect movement, or where I don't expect it, like if I wanted an iron condor trade on it. So it's all about what trade do you want to do? What market do you want to trade? What time of day do you want to trade? What strategy or system are you using to trade? Are you going both directions, neutral, one direction? So I can easily help you on that. I just got to know what exactly it is that you're looking for. Because it's an option for a reason. There's options. But it's not complex. It's just, what do I want to do with it? It's like having 10 colors on a canvas, or little whatever you call that thing that art is told to have all the paints on it. You got all that right there. Which color should I use? What do you want to make? Do you want to make a butterfly? Or a boomerang, or whatever. Palette. Yes, thank you. So yeah, Greg. So I definitely do trade the spreads. Yes. To make a trade, I'd have to pull up my charts right now in front of you. We'd have to wait for it to come up. We'd have to wait for the right entry. I don't just take a spread because I want to make a trade. I gotta have my system that I designed that tells me when to get in, when to get out. Where to set my stops, where to take my profits. Like, it has to trigger an entry. I don't just hop in a trade just because I want to trade. I don't just buy a spread because I like the profit and loss difference. So, which is a big mistake traders make. They'll hop in and go, I like that. That's $5 risk. I don't know why I lost. What's 30 points out of the money? That's why. For an example, like the Apex Elite strategy that we do every day, we have traders that trade these just on the spreads. We have traders that trade them on futures, on Forex, CFDs, stocks, whatever. But basically, when we get an E-bar, and the E-bar is green, and what we call the MVP, this green line down here, both of those are the same color, okay? And it breaks in this case, the Russell breaks 3 ticks above the high. Then we have a buy trade, okay? And then we have our stop, 5 ticks below the P. We trail it up with this line. And then when it moves up a deviation, tighten it up to what we call this little predictor arrow. Tighten it up right there. That's 3 points. So on 10 contracts, that'd be $320. On one contract, that'd be $32. So if you're looking for how to know when and what to trade, like that's where you're going past the basic application of what is a spread and how does it work? How do I buy and sell a spread? How do I find a spread and know what I'm looking at? Like if I wanted to buy right now, what would be the best spread? If I want to sell right now, what would be the best spread? Now you're going into what market do I want to trade and how do I time my entries? So if you want help on that, then definitely hop over to our site. We got stuff that will help you out. So you might want the elite strategy is the main one that we use on spreads. So most of the other strategies are like binary focused. Now there's a lot of binary strategies we also do on the elite strategy. We do binaries and spreads. But spreads are not a scalping instrument, which is another misconception on spreads. If you got a 3 or 4 or 5 tick bid out spread, you're not probably going to be scalping that thing for 10 ticks in and out. So I use them to scalp, meaning I'll buy them to hedge scalping on another like future, but I don't usually scalp with them. I'll scalp with binaries, but I don't scalp with spreads. So which means I'm usually going for points, not ticks. I'm going for 20, 30, 40, 50 ticks. I'm not going for 1, 2, 3, 4, 5 ticks at a time. They're built to make more money over larger moves versus binary can make a whole lot in a small move. And there's good and bad to both. But you can see you can ride these trades out, use like daily contracts, and it's some nice moves. It was a 61 tick move, a 32 tick move, a 57 tick move. That was today. So. And let's see here. Now what do we got? I'm going to go up. I want to just... Some of the questions are great because when they come out, they actually reveal some of the misconceptions. Let's see here. So how much do we make trading them? Hop in our room and watch and find out. But I have a lot of screenshots of a lot of live trades inside of our forum. Feel free to look at them if you want to. They don't mean anything. What matters is what can you do. So that's hopefully I can help you out with that. Let's see here. So Travis, you're asking how to place a take profit order. So if you want to take a take profit order in Nadex, then what you do is let me go up here and choose scanner live, and then let's put it on. So euro dollar, Aussie dollar, pound dollar to pound dollar. Okay. And let's say I go in and I put in an order to buy this contract for 11 o'clock. Here we go. And so I put this order in. Buy, we'll say 10 contracts. I'm not going to do it on my live. Yeah, probably should switch that over because I'm not even looking at a chart. There we go. They're on a live right there. So now we're on demo. So 10 contracts. I put the order in to buy. I hit place order. Okay? Now my order's in. There's two ways I can place a take profit limit order. One is if you're using the scanner, you can go in here and just click on this button right here. It'll pop up, put it in the opposite direction, fill in your quantity, and let's say I wanted to sell it. I bought in at 68.20. Let's say I just want to get out at 68.30. Okay? I'm just showing just a random example. And so I adjust my order price to 68.30. Make sure it's what you want it to be. Okay, so that's 10 ticks higher than where I bought at 68.20. If I sell 10 ticks higher on 10 contracts, I make $100. And I hit place order. And now what will happen is you'll see it pop up as a working order down here. If you're doing this over inside the Nadex platform, you can also, by the way, click on the order on either one of those and hit cancel. And click on the green arrow, and I can just adjust my price. So like 68.30. Okay, and then hit place order, and it'll put it into my working orders contracts. And a very helpful feature, just if you don't know you have any tickets out there, you can use tickets, and you can see any and all tickets currently open. So it brings them to the front for you. Get rid of them. I tried the other day, they didn't know they had a ticket open. So this helped them find that ticket quickly. One of my traders taught me that as a newer thing I think they've added in. Let's see here. Do you use the daily 415 contract, or does it vary a lot? It completely depends upon what I'm trading, Scott. So, if I'm hedging, obviously I'm not using the 415 because I don't need a hedge for 8 hours. I don't want to pay for the premium if I'm trading futures or Forex. If I'm doing a straddle, it depends upon what the premium is and how far I think the market's going to go either way. If I'm using Iron Condor, it depends upon, again, how far I think the market's going to stay within a range by a certain time. I have all the stats on every news announcement. If I'm trading directionally, the easiest way is to choose a at-the-money, the master spread, because you don't even have to worry about it. You're just mirroring the market. If you're not using stops, that can be an issue. So you may want to, put on another spread to hedge it off. It'll actually give you lower risk. You'll just put more capital. Or you can just choose a lower risk spread, less time to expiration, less premium in there. You'll mirror the market better. So it depends on it really depends on it. So like if you go back and look at the last 2 weeks, especially last week, the webinar, I put up how to, and I know that we're going to put it on YouTube as well, but basically it's how to choose the best spread. And so it depends upon what you're looking for. So you need to look at how much time is there to expiration, what's the proximity distance, how much am I putting up, am I going to take a stop, am I not going to take a stop? So I'm not trying to be evasive. I just try to actually be accurate versus giving you a pat answer. And but yeah, real simple answer. I'll give you the simple one. Yeah, I always do that one. But I want to tell you, this is what I really do is I look. That's why I built the scanner. If I was always going to do the 415, then I wouldn't have made the scanner, right? So because it'd be really simple. Buy that one, So, but it wasn't necessarily the best trade because I go in. That's $400 risk. I could do one for $10 and had it till 11 o'clock. And if we look at these, it's pretty cool when you start comparing the differences on these. Because here's what you're going to see: 3 trades, $5 risk each. One has the exact same. They all have, by the way, the exact same break-even distance or proximity to underlying. Okay, 17 ticks away from the market right now. One expires in 34 minutes. One expires in 94 minutes. One expires in 154 minutes. You can buy one with basically 2 hours more time to expiration for the exact same risk and exact same proximity. Why would you in the world even pick that spread or that spread? There's no edge. There's no benefit to trading them. Okay? And so, now I don't do this anymore. Now I can just look at it and I know. But when I first started out and we built this and I was using it, I'd go in and I'd literally start ticking stuff off. I'm like, well, I'm not picking that one and I'm not picking that one. Let's see, that has $92 risk and $6 profit. Not interested. Okay? $42.56, $42.56, 4 ticks offset, get another hour. Yeah, I'll go ahead and get rid of that because remember, you want time for it to move. So now I'm down to like these right here. Let's see, $241 risk, $7 profit. Not interested. Unless I'm doing some sort of Iron Condor strategy. That'd be a really small one. Okay, so now I got a choice of $42 risk or $117 risk. That one's 100 pips wide. That's 250 pips wide. Well, now it comes down to what am I going to do? Okay, well, I could buy twice as many for the same amount of risk. If I'm not going to use a stop loss, okay, I could do almost 3 times the amount. So that may make that trade better. They're the exact same proximity, 4 ticks. So that would probably be a better trade, but I get 1 less hour of time. And now if I am going to use a stop, if I'm going to get out if it moves 20 ticks against me, then there's no reason to spend all the extra, fees, whatever. Because now it'd be $20. It's $20 either way. Do I want to risk 60 or do I want to risk 20? If I want to risk 20 by 20 ticks, then why build with that? Just do this one right here. And then I go, well, do I want to use no stop loss, but it has to move 17 ticks? Or do I use a stop meaning I get out of the trade before expiration, like if it goes against me? Or do I want to use one, but if it moves 4 ticks, not a big deal. If it moves 4 ticks by expiration, if it just moves that far and nothing else happens, I break even. Or would I rather be willing to give up $5, which is about the same thing in this case, but it's got to move 17 before I really, I'm going to see a lot of profit. And if I'm like, well, I'm going to use a stop, and I don't like that because I want to get in and out of the trade. I want that one. Now I have the master spread to deal with, the one that goes till 3 o'clock tomorrow. Am I going to be up past 11 or not? Because if I'm not going to be around here to manage this thing, I probably don't need this one. It's only a couple ticks difference. It's going to twice the amount of money. If I'm going to use a stop, then $20 is $20. It doesn't matter whether I put up 100 or 200. Because people will see max risk and they think that's my risk. What's your risk if you stay in all the way? But, the probability of the euro dollar moving 290 pips between now and 3 o'clock is very low, okay? Doesn't mean it's not going to happen. That'd be awesome if it did. I hope it does. There'll be some great trades. But, max risk is just the amount of money you got to put up, to me. It's not necessarily my risk, because I will get out of the trade if it goes against me. Or I use I'll hedge it off. Like, I'll buy this one, and then I'll maybe go down here, and I'll find a low-risk trade to hedge it off. Maybe I'll sell that one. To hedge off the trade. That's at 10 o'clock, maybe one at 11. Yeah, and it's $14 for it. It's the exact same, so I get a bigger hedge. And now the trade goes against me by 11, and it really goes against me. I could make money if it goes up a lot faster, but if it goes down and it went far enough against me, I could actually make money if it went down. So this is what I call the make your own box strategy, basically where you design a spread and there's not a spread. Let's see here. There's a few different ways to manage it, Todd. If you check out our website, I'd be glad to help you out on that. So, let's see here. Remember, you're on a very advanced webinar. This is Misconceptions, and we're going into little intricacies and details, and this is not Nadex Spreads Made Easy. Let's get into the nitty-gritty details and help you understand the things that people inaccurately assume. Okay? And usually people who haven't seen the Nadex Spreads Made Easy video are the ones who are assuming those things. So if you've been taught correctly from the beginning, then you don't make a lot of these false assumptions. But people come in and they just start trading and they have no idea, oh, I didn't know that NASDAQ ticked that slow. That's why it's not moving as fast as I want it to, because I love trading NASDAQ futures, but this is just not what I want. Well, you need to do 20 of them. And by the way, understand the whole point differential and the tick size. So, but if you're trading Russell, you're going to be like, this is fine. You're not even going to notice it. So, your dollar, same thing. Most of the contracts tick the exact same way. There's only a handful that don't. So, the slower moving ones are US Tech, silver, and copper. The faster moving ones are S&P, corn, and soybeans. And then the ones that are just a little bit slower, but not so slow that it's an issue, DAX and FTSE. So, because they tick in 0.5 versus 1 on Nadex, because everything's in a 1. Everything else ticks the same as the underlying market, meaning if it ticks in a 0.1 or a 0.01 or 0.01 or a 1 or whatever, it matches. So, let's see here. Carrie, can Apex spreads be... can spreads be along with the core trades? I would not do that. They're not designed for that purpose. So those are 1 tick in the money trades. And you'd be surprised how many are 1 tick in the money, which means you make $1. There's a lot better trades you can do with spreads. than that. Let's see here. Going in, looking at your commodities are going to be more liquid in the day. But yeah, definitely if you see anything weird like that you don't like or whatever, if you're looking for more strikes, I know we're working on that with them, put in some stuff in. If you see anything like that, then definitely submit that, Kevin. Okay? Like in the help desk. And the way that you do that, if you have any questions about, hey, can they, why is this ticking like this, or how does this work, or this doesn't seem to be quoting right, or maybe it's a misunderstanding on my part, maybe it's an error, whatever. The cool that you just submit a ticket directly to them, just under message us, and you'll have a little section right there you can fill in the form and submit it to them. Let's see here. All right. What other questions do we have? Like any questions you got about spreads? Because that's my big goal here, is that you understand that the spreads are priced the same as options. The bid-ask spreads are normal compared to options. Okay, they're not futures contracts. They do tick the same when they're at a delta of 1, but they will go slower in their price change until they get to that delta. But it's a same-day expiration, so you're not all like getting all up in the Greeks. Okay. Keep it very, very, very simple. The leverage is awesome. The the risk is capped, and understanding things like what matters most. We talked a lot about that last week, but going in and looking at understanding proximity will save you so much errors just by understanding that simple concept of like, this is how far it needs to move before it's really going at a fast rate. If it's really far out of the money, even though the risk is only $5, may not be a great trade for me. Okay, it's like buying a $5 binary, except for when it gets there, it's only going to be worth $5. Okay, let's see here. What else do we got? If you want to know what charts we recommend, what strategies we recommend, then the sign up to get inside of our website here, because we have a whole course that takes you through it for free. Okay, so it's just right under here, and then you can go, like, you can do the elite section, you can go through that, or you can go through just the active courses section right here, and it'll actually get you set up on the charts and everything. Charts? Okay, yeah, so go there for charts. Indicators, go there for indicators. And are they different for spreads and binaries? Yes, because spreads and binaries are completely different instruments. They're derivatives. So not only are they different than futures and different than Forex and different than options, I mean, every one of those is different, right? Futures are different than Forex, and Forex is different than stock, and stock is different than options, and they're different. So spreads and binaries are completely different. So you trade them differently based on what it is you're trying to accomplish. Like, I rarely ever, there's only like one trade a quarter that I'm consistently that I do using binaries for strangles. If I'm going to do a 2-direction trade, okay, like random walk where I don't care what direction it goes, just move, I'm always going to do spreads over binaries. Actually, I have a whole webinar under that, under what's better, spreads or binaries, and I talk about for what strategy. So it's what system. The course is free. It's what system are you using? Like, what is your rules for entry and exit? Because if I have a system where I get in and I get out 10 ticks later, that's not going to be a good spread system. It could be a perfect binary system. Okay? And so that should help you out. And then, yeah, if you're ever trying to find topics, so, where can I find out more about premium collection or whatever? The best place on premium collection on spreads is actually under our news trading plan, Todd. So, there has to be enough there. There has to be enough time there. There has to be enough implied volatility there. But if you go over here and, like right there, it said Iron Condor trainings, that would be what you'd look at. It's right there. It's under May 4th. I just roll it forward. But I show you like a straddle versus an Iron Condor, which is premium collection. Then I have a whole webinar that I did right here with Nadex on Iron Condors. and then some other stuff as well. So radio show where I actually walk through one. So so that'd be the place to go. Go to the news calendar if you want to know how to do the premium collection on the spreads. Now I have some other webinars too under this bonus webinars. You can go to that. Like all those, there's tons of them. Like I said, there's probably 400 or 500 hours. So that, like whatever topic you're looking for, just let us know and we'll help you out. Let's see. So once you got your charts down, actual charts, like real charts with volume and live data on futures and on Forex, and even on Forex, you need futures Forex because you need real volume. You don't use Forex volume like a MetaTrader. It's not real. It's just it's literally how many times did the price change in a bar. It's not actual volume traded. So you need futures Forex for Forex, and so yeah. So it sounds like you're on the right path because what you're said, hey, you're working on this. You're getting the platform down. You're understanding how the spreads work, how the binaries work. Greg. So yeah, your next step once you get down those basics and how things work, and how the platform works. Your next step, you get involved with other traders so you can start asking questions. Like even if it's just in the forum right here, just get involved and start asking questions. And then your studies. Okay, I'm going to actually start looking at what indicators should I use. And then strategy. Okay, how am I going to put this stuff together to make a decision on buying or selling? Okay, like what are the different ways I can use them now? Like when this crosses that, okay, so do I want to buy a binary or do I want to buy a spread? And then I go, okay, system, what are my rules for getting in, getting out, taking profit, etc. And then it's, once you got that down, then you actually start backing up and looking at a lot broader things. Like, okay, I know my system says buy, but the market's at a full deviation move, which is 30% of the time or less, the market will move further than that. So I have a lower probability of this trade being profitable, and volume is now dropping on the upside, but it just started picking up on the way back down. And so I really should not probably add into any additional positions, and I probably should tighten up and take some profits. And that's an example of what happened today on the Russell. We're in on the trade, and just to show you, like right over here, this is one deviation for a day. So this is like how far we expect the market to move in a day was like right there, okay? And you see we're just a little bit, like a few ticks off. Market ran up right there and then turned around, came on back down. So that was an expectation. So don't add on to a long position. In fact, if anything, look for a short trade to hop in on. Forex spreads are a derivative of Forex spot. So Forex spot is what they're going to use. But, Thomas, what I was emphasizing was make sure they're using futures Forex volume. So you're actually looking at a real volume chart when you're doing the trades. Okay, so you want to use like future volume, not like you want to use like 6J. So I'll show you an example. Let me just pull up just a basic chart real quick. At euro dollar, flip over to that, and here's just volume on euro dollar. Let's see, where is it? I need to compile. Let me do a screenshot of that real quick, sorry. Let's see here. Go back over. It's going to give me an error again, but I need to take a screenshot. Just for reference. Anytime I see an error, I'll take a screenshot of it so that way I know to have somebody fix it. And then the way I fix it, if you are a Ninja user, you just go to Tool, Edit, and then I just click on the first indicator on the list. And then I click a little bit right there, it says Compile. And now, I go back to my charts. Yeah, there's my normal volume indicator. Hit New. Hit OK. Okay, so this is Forex volume. All right, now I have like I want to say it's 18 different providers feeding in on mine, but most people just have one. So mine's going to be a little bit more, I guess you could say, accurate, but most people don't want to pay for that. Right here, I'll go in and I'll use this, and it'll actually pull automatically the volume from Forex. Okay, I gotta do a default 24/7, but it'll tell me not only what the volume from the Forex futures market is, but it'll also tell me what the expected volume is for any given period of time. So in this case, like, it tells me how much volume to expect every 4 minutes in the market. It's right there. So now, like, they're close, but they're not. This is actual contracts traded, and it'll tell me exactly what to expect on each hour versus the random tick volume that comes up. So you have like massive volume bar here, but no volume on the futures market. So you'll get these random spikes that don't mean anything. Every once in a while they'll line up because there was a lot of ticks in that bar. It moved really far. So of course it'll be big. But notice like right here how we had like lower volume. These little blue bars are volume, but here like it was the exact same on the ticks. So you want to get futures Forex volume for Forex trading if you want to be able to accurately read and use volume. And I use volume, price action, and expected movement. Those are the three things that I base all my trading strategies on. So, yeah. But, yeah, you're right. So, spot Forex. Let's see here. Any other questions? If not, I'll wrap it up. But hopefully, I'm hoping y'all got a few tips and tricks. The biggest thing is just understanding that your leverage is better, your risk is capped. Okay, they move more similarly to an option, but it's an option that trades on the last day of expiration. Okay, which means it moves really fast compared to an option that has like days until expiration. And make sure you look at how much time you have until expiration, because you may get the same time, same risk, same proximity, but be able to get 2 more hours at no additional cost. It's just little tips like that sort of like flip people out, and understanding the differences and the similarities. And I'm hoping y'all picked up a couple things. Does anybody have any more questions? If not, I'll wrap it up. Trying to scroll through, and I think I got it. You're welcome. Awesome. Well, y'all have a great night. And again, if there's anything that you're stuck on, we have all those short videos under the Education Nadex section that are like step by step, piece by piece, make it really, really easy under Education Nadex inside of our website. And that'll really break all this down for you. And we got some more advanced webinars as well when you're ready to go to that level. If you're new today, you got like hammered with a lot of like really technical sounding information, but it was really just like filling in little gaps of information once you have the general concept down. All right, y'all have a great night, and I look forward to helping out everybody I can this week.